Forbes magazine published an interesting take on how inflation could push gold and platinum higher. As Senior Contributor Clam Chambers wrote, the old joke goes, when you're in a hole, stop digging. This is not the luxury for the US or Europe when it comes to piling up national debts or printing money. It isn't an option for the world economy either. Now, there may be a light at the end of the COVID tunnel, but that twinkle of hope is still a very long ways away. The bond market, which used to be considered vigilant when it came to monetary policy, is stirring that prospect. The bond market wants more interest for its risk of inflation or its indigestion of too much supply. The central bank simply buys bonds from the market, driving up the price and driving down the interest rate. What it buys might not be straight cash, but whatever it uses is heading towards cash. So it's not much different than just printing $20 bills. That cash travels, and the travel keeps the global economy afloat. The US is approximately 130% debt to GDP ratio right now. At this point, predicting the future comes down to setting the level where a government and an economy can be comfortable with that debt load. That level is actually 100%. So if the equilibrium point is a 100% number, then the value of those debts must either be inflated away or real GDP growth must do a rebalance. At an optimistic 3% growth annually, that would take a long time, so inflation is going to do its job. Some would argue that if 150% debt to GDP ratio was sustainable, then politicians would push that envelope even harder. And that guarantees inflation. Take all these variables and it would seem a 30% inflation in the next 5 years is very conservative. And without a doubt, Bitcoin continued its historic rise in large part because of the inflation fear. So how does gold play into this? There was a lot of hate towards gold and it's been continuing because jewelry demand is down. But jewelry isn't gold's only market. There's other things that gold does. And gold is an old type investment. Crypto, on the other hand, is a very young and new investment. And it seems like the best is yet to come. However, that could change quickly. Gold jewelry demand will rise. And not just because people are buying jewelry again, it's because all the other industries are back and they need gold. The medical industry needs gold for COVID-19 testing, for treating cancer, arthritis, and many other diseases. The dental industry, electronics, electrical, and aerospace are all in need of gold. Then you have this Ripple lawsuit. The controversy might inspire some investors to be more cautious in investing in crypto. That could lead to a correction. Chambers said that he will watch Bitcoin and buy gold as soon as he thinks it hits the bottom of this recent correction. He also states that he's looking into platinum. They don't make much, and it's going to be a core to the hydrogen economy, the next phase of the zero-emission economy drive. In fact, he believes that regardless of the economy, platinum is going to do well because the world is set on a course for powering itself with renewables. And the best way to store energy for the wind, for when the wind isn't blowing or the sun isn't shining, is to split water into oxygen and hydrogen and turn it all back into water with the help of platinum catalysts. And I've shared a lot of Chambers' investment strategies. I also believe platinum will eventually catch up with gold as a hedge. I also believe that gold is far from being dethroned as the major hedge for everyone. I do suggest you follow what I do or what Chamber does and take a look at it. But take a look at it and talk to a financial advisor and see what's best for you. But after you do that, and if you think you want to get into precious metals, give us a call and we're here to help.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open and we're happy to answer any of your questions.